Hello everybody, welcome to Chapter 3. Sir, what is Chapter 3, sir? Chapter 3 is Risk Assessment and Internal Control. So far we have learned in Chapter 1 and Chapter 2 the objectives of auditor, the audit planning, the audit strategy, right? We have understood the basics. Right now we are coming to an important element, that is risk assessment and internal control. Sir, one question before we dive into Chapter 3, sir. Are you revising? If yes, give a thumbs up to this video. If not, don't give a dislike. But in the comment section, write down, why are you not revising? What is making you not revise? If you are able to give your input, I would come back with a solution, sir. Okay, so when you are revising, the goal is not to read the same line 10 times, right? If you want to remember and produce the same output in exam, then you should not just read but also understand. Then only you will be having that retention, sir. Otherwise, you would remember today, you would remember tomorrow, but on the exam day you will forget. Please, sir, very important. Audit revision is must. If you feel like you understand everything after the revision video, it is that feeling only which makes people not revise. But the rankers, the toppers, the ones who qualify in the first attempt, they don't do that mistake, sir. They would revise as soon as they get that class completed. They would revise and they would again pick the same chapter after a week or 10 days to complete a second revision, and third revision they will be doing it during the 1.5 day. So they would be having that sufficient time. Sir, please plan your exam properly. Your 1.5 day should be ready. So why am I stressing before this? Because chapter 3 is going to be a lengthy chapter. I'll be taking it into two parts, but still you have to complete this first part, revise, then only go to the second part, sir. Okay, right? For all the November 2026 students who are writing the exam during November, you feel that you have time, but time will pass just like that, and you will be like, when will I complete? How can I complete? I don't want you all to face that trouble, sir. Without any delay, we'll start chapter 3. Okay, sir? Okay? Jai Hind. Sir, coming to the first point, what is audit risk? Sir, audit risk is the risk of the auditor giving an inappropriate opinion. Okay, very important. The keyword is inappropriate audit opinion. When financial statements are materially misstated, auditor is giving an inappropriate opinion. Let's say there is a material misstatement, or auditor is saying company's financial statements are true and fair. How far it is right, sir? It is a blunder. So that is the risk of an auditor. That is called as audit risk. Okay, auditor expresses an unmodified opinion when financial statements are materially incorrect. That is the risk, underlying risk auditor carries right from the start of the audit till the end of the audit, and so on and so forth also, because regulators can come and ask even after 3 years and 4 years also, but still that risk lies on the auditor. Okay, what if the risk, audit risk, materializes? So far we are understanding the risk. Okay, what if this risk materializes? Sir, first important, let's say you remember the story of the Satyam scam, right? The Satyam scam, what happened? The Satyam scam, it is a pure classical case of window dressing, and auditor was under the charge because his risk of giving an inappropriate opinion came into picture. And what happened? The reputation of entire auditing community, reputation of entire auditors, right? It got tarnished on that day. Correct? It got tarnished on that day. So the auditors who are supposed to give an appropriate opinion should be very much vigilant and watchful, sir, because it directly affects your reputation and that of ICAI. That is one. And second, regulatory action from professional body, right? ICAI can go to an extent to remove the membership of that auditor. So it comes under gross negligence and professional ethics are very much to be followed, if they are not exercised in right spirit, ICAI can take high disciplinary actions, sir. That is second point. And third point, probable legal action by intended users of financial statements. The stakeholders who are taking a decision basis your financial statements and its opinion, basis your audit opinion, they would be taking a decision, right? That decision is backfired and you are under the radar, they might fall back on you, and the intended users, those are the stakeholders, can take a legal action. So these are few consequences if the audit risk materializes, and that should not be happen, sir, because you as an auditor should protect the reputation of yourself, of your firm, and that of the institute, sir. Okay. And what is SA 200 requirement? SA 200 says auditor shall obtain what kind of evidence? Sufficient appropriate audit evidence. SAAE. Sufficient appropriate audit evidence. Sufficient appropriate audit evidence. Sufficient appropriate audit evidence. So remember this. You don't write audit evidence, but write sufficient appropriate. Why? Sufficient and appropriate talks about the quantity and quality. Quantity and quality of audit evidence is very much important. That is why those two terminologies, sufficiency and appropriateness, both are very much important, sir. Sufficient and appropriate audit evidence to reduce the audit risk to an acceptably low level. Only then he can draw a reasonable conclusion for his audit opinion. So whenever auditor is giving an opinion, whether unqualified or modified, he should have a sufficient appropriate audit evidence. Sufficient appropriate audit evidence. That is when he can give a reasonable assurance. So very important, sir. Okay, understood. Now coming to audit risk formula, very important, sir. Very important formula for your exams. Sir, audit risk is nothing but risk of material misstatement multiplied with the detection risk. Sir, what multiplication? Why are you talking about mathematics in the name of audit, sir? No, understand, my friend. Before we understand the multiplication and stuff, let's understand what is risk of material misstatement, what is detection risk, what is inherent risk, what is control risk. All these terminologies we have to understand. Then we will be able to talk about the mathematics, that is multiplication there. Okay, I told you risk of material misstatement. Sir, material misstatement is nothing but a misstatement which affects the confidence or the decision of the intended users, right? That kind of a misstatement is called a material misstatement, which significantly affects the decision of the stakeholders. Correct? Those kind of misstatements are called material misstatements. And if you add risk to those material misstatements, auditor is now having that risk of material misstatement, meaning he is having that potential thought process of this kind of material misstatements could exist, that could be underlyingly existing, which is nothing but inherent risk, or which could be existing or falling to exist due to controls which are in place but are not in action. So what we are able to understand, there is a whole lot of things that are now running here. Risk of material misstatement means there is a risk which is absolutely involved before the inception of audit. That is nothing but inherent risk. The word inherent only says inherent. It is there from the inception. It is there before the audit started. It is there before anybody entered. Sir, let's say a new Ind AS came. Nobody understands how to record a particular line item due to this Ind AS. So there is the inherent risk that this particular assertion or line item could fall a misstated value and lead to a material misstatement if the value is high. That is the inherent risk which already is existing before the audit procedure started, before the audit even have come into inception. That is inherent risk. What is control risk, sir? Control risk is nothing but the failure of the controls which are in place. Let's say you have appointed a security guard for your bank, and the security guard suddenly went for a lunch, and he went for a lunch and didn't come back because After lunch, he thought he would go home and have some power nap. That power nap lasted for 3 hours, and then he came back to the bank, and by the time he came back, entire money from the ATM got stolen. Now what is this called? Have you not placed the control? Sir, yes, we have placed the control. The security guard is appointed, but the control got lapsed. So that risk is called control risk. There are two risks here which we are talking. One is inherent risk, which exists right from the beginning or the inception of audit or before the inception of audit. That is inherent risk. And second, control risk, the lapse or failure of the controls. Those both risks, sir, inherent risk and control risk, if you multiply, then you have something called risk of material misstatement. So risk of material misstatement is a broader term, and under risk of material misstatement you have two important risks, that is inherent risk and control risk. Okay, understood, sir? Auditor has no influence on those two risks. Those two risks exist parallelly, simultaneously. That is why they are multiplied to each other, and those together when in conjunction form to be part as risk of material misstatement. That is the material misstatement which affects the decision of the stakeholders, sir. Understood? And there is another definition of audit risk. Audit risk is nothing but inherent risk in conjunction with control risk, in conjunction with detection risk. Sir, what is detection risk? Detection risk, sir, see the word itself, detection, right? You are applying audit procedures as an auditor. Okay, after applying audit procedures, you haven't found any irregularity. You said this particular assertion, this particular line item is fine. You're going and you're feeling that you had sufficient appropriate audit evidence. But what if you are not done, or what if your procedures are not fully completed? What if they have a misstatement which could be material misstatement, and those are not in picture because of you not applying the audit procedures? You are doing your own job, you are doing correctly, but what if that is not sufficient? That is called detection risk, sir. Detection risk is nothing but audit procedures fail to detect the misstatement. Audit procedures fail to detect the misstatement, and it belongs to the auditor, sir. It is not of the management. Auditor can influence and reduce it. Reduce by what? Reduce it by including the sample size to a larger number. Reduce it by what? Reduce it by having better procedures, experienced team. So detection risk can be influenced, can be modified, can be reduced. When he reduces the detection risk, is audit risk, that giving an inappropriate opinion and to reduce his risk to an acceptably low level will also be reduced. Those two are in correspondence. Understood, sir? Detection risk lies with the auditor, control risk and inherent risk lies with the management, sir. Okay, when you combine all these three, this forms to audit risk. And as we are learning, the auditor's responsibility, auditor's objective is to reduce that audit risk to an acceptably low level. Understood, sir? Okay. Sir, let's understand the risk of material misstatement at a broader level, right? So, what is a misstatement? Misstatement is nothing but a difference between the reported amount. Okay, difference between the reported amount, whether it could be classification, presentation, or disclosure. If it is not as per the AFRF and it is something otherwise, then it is a misstatement. Then what constitutes a risk of material misstatement, sir? When this misstatement, if it is material in nature, meaning which affects the decision of the shareholders, that is a material misstatement. That becomes a potential threat or risk to the auditor. So he has to identify all the risks of material misstatement so that his audit risk would be acceptably low level, sir. So what are the examples that ICAI has given us as misstatements? These are illustrative but not exhaustive, sir. So these are few examples. Capital expenditure charged to revenue account automatically. You bought a fixed asset and you're charging it to P&L account. That is wrong. So automatically that is a misstatement. So whatever you are seeing, the number in your balance sheet as far as fixed assets is concerned, that is incorrect. Correct? So
you are using inappropriate accounting estimate, inappropriate accounting policies for something which is not a standard regular audit practice or not a standard regular accounting practice. You are doing something else, right? And you are using fake expenses, fake reimbursements. You are not writing off debts properly. You are writing off debts unnecessarily. You're doing so many things. You are undervaluating or overvaluating inventories. These all constitutes to what is called as misstatement, sir. You have to keep in mind, you have to be vigilant, you have to be watchful as to whenever there are things like this. Management will not reveal all those things, sir. You have to be watchful. When you are vouching a particular transaction, you should not just vouch what is the amount. You should also understand the genesis of the transaction, whether this transaction that is there, that is documented, whether it is going to the right account, right amount, whether it is charged to the right head. You should think of all the parameters, sir. Understood? Very important, right? There are two levels of risk of material misstatement. One at a assertion level, one at a overall financial statement level. What is at overall financial statement level, sir? Overall financial statement level, this is an important term which I'm going to talk about, that is pervasive. Pervasive, sir, important keyword, pervasive, right? Risks that relate pervasively to the financial statements as a whole are risks of material misstatement relating to the financial statements as a whole. What are we talking about here, sir? So pervasive nature, that means it is not just affecting a single line of item, single assertion, it is affecting the whole of the balance sheet. So that itself is an entire risk to the auditor and to the management as well. So pervasive is a keyword you have to remember for your exams, right, sir? Okay, so it affects not just one assertion, it affects many assertions, it affects so many line items in the balance sheet, because it is pervasive, it is affecting as a whole. So whenever you are intending to use this pervasive, make sure that it means it is not just affecting a single assertion, but it is affecting whole lot of things in your financial statements are very important. Okay, next, risk of material misstatement at assertion level. What is an assertion level? Risks at a specific area, specific class of transactions, specific balances, disclosures. If it is very specific, then it is called at assertion level. What auditor will do? Auditor will determine the nature, timing and extent of further audit procedures, because there exists a risk of material misstatement at an assertion level. What he will do? He will not just do normal audit procedures. He will apply further audit procedures to make sure that his audit risk is reduced to an acceptably low level. Understood? Makes sense. So what is not included in audit risk? Auditor's business risk. Example, loss from litigation, adverse publicity. This is not included in the audit risk, sir. Okay. Risk of other events arising in connection with audit of financial statements. So these are also not included as part of your audit risk. You are not. How can you account for things which are not in your control? The contingency events you are not having any control, so that doesn't form part of your audit risk. Okay, the third one, the risk that the auditor expresses opinion that financial statements are misstated when they're actually not. This risk is ordinarily insignificant. So let's say auditor has given that, okay, this financial statements are not true and fair, but it turns out to be financial statements are true and fair. This is not the audit risk, because our entire accounting profession runs under one law of conservatism. When auditor feels that these financial statements are not true and fair, and if he gives an opinion and eventually it turns out to be okay, it is fine, it is not actually misstated, it is correct only, that really doesn't form to be part of his audit risk, sir. So the risk that the auditor expresses opinion that financial statements are misstated when they are actually not. Okay, this is not included in audit risk. But actually you should also consider that, because whenever you give a report like, okay, this is misstated or this financial statements are not true and fair, but it is actually incorrect, that it is otherwise, does it really will it cause to be a tarnishing image on the company? Yes, sir. So we should be careful, you should be vigilant, right? So these are the three things which are not included as part of your audit risk. Understood? Right, sir? Okay. Sir, another important point. We are talking something called as professional judgment. So what is professional judgment? See, according to the professional, that is according to the chartered accountants, we as an auditor, we would basis on our experience, on our understanding, on our approach, on our way of seeing the details, we would apply our judgment, we would apply our understanding, and then decide the risk of material misstatement, and then decide the overall audit risk. And that is very much judgmental. It is not discretionary as to, okay, for this particular audit this kind of risk of material misstatement exists. No sir, it varies from audit to audit. Sometimes auditor might have difference of opinion. If you might see, one auditor who was doing the audit last year must have given a different ratio for his risk of material misstatement. The other auditor next year completely varies. It could be a scenario, because auditor to auditor, every auditor is a professional and they exercise something called as professional judgment. So assessment of risks is a matter of professional judgment, not a mechanical calculation. The approach may vary, but making appropriate risks assessments is always more important than the method used. So it's not about the methodology as such, because every auditor in the end is a professional who has got experience, understanding, and they have a particular methodology, and basis that they can apply their judgment and are able to get something called as overall audit risk, at which they are able to calculate risk of material misstatement for the particular entity for which they are doing audits. Okay, so let's see the complete risk tree, audit risk framework. Very important. You just have to remember, draw a mind map, like, or if you have a paper and a pen, just draw it. Right, you have audit risk. You have audit risk. That is your main tree. Then comes two sub trees. What are those two, sir? One is risk of material misstatement. Other is detection risk. Risk of material misstatement, the other two branches, what are those two, sir? Under risk of material misstatement, what we discussed, inherent risk and control risk. Inherent risk is the risk which exists, which is in the company before the audit started. So these are the risks which nobody can't avoid, right? Those exist potentially. Then what is control risk? Control risk is that risk which exists because there could be a lapse or failure of controls. Because of that, control risk exists. Correct? And what is detection risk? Detection risk is from the auditor's angle, where he is applying procedures, he is doing his judgment, he is doing everything that is needed. But again, his audit procedures might fall short. To what extent? He is unable to detect. That could be a detection risk. His sample size could be a main reason. So what is the agenda here? What is the branch here? The sampling risk and non-sampling risk are forming the branches for detection risk. So this is the overall audit risk tree, sir. You can remember on a high level, audit risk, risk of material misstatement, and what is the other one, sir? Detection risk. Under risk of material misstatement, inherent risk, control risk, sir. Under detection risk, what are the two risks for the auditor? Sampling risk and non-sampling risk. Even if he is picking sample, that is a risk. Even if he is picking the samples on a too much number, that is also a risk to the auditor. So both sampling risk plus non-sampling risk together forms to be part as detection risk, that is solely for the auditor, sir. Understood? Okay. Coming to this quick comparison table, this is for your understanding. This could be asked in exam, so please focus, please concentrate. Okay. Auditor's control. Okay. Inherent risk belongs to whom? The entity. Control risk belongs to whom? The entity, meaning the client. Detection risk belongs to whom? It belongs to the auditor, sir. Okay, auditor has got control over inherent risk? Absolutely no, because it exists from the beginning of the audit. It exists in the company potentially. Even before the audit started, the risk is existing. So auditor has got control? No control. Whether he has got control on the control risk? No, absolutely. We discussed the narrative of the security guard who went for lunch and thereafter took a nap, and he came after 4 hours. So whether auditor has got any control over such control lapses? Absolutely not. Whether auditor has got control over detection risk? Yes, sir. He can apply procedures, he can do further audit procedures, he can increase his sample size, he can increase his controls, he can increase his testing. Then thereby he can reduce what is called as detection risk. So it is under auditor's control, because It belongs to auditor only. That is why he can control. Otherwise, he can't control. Right? Exists before audit. Inherent risk, yes sir. Control risk, yes sir. Detection risk, no. Why? Detection risk starts only when you figure out the audit risk or material misstatement. Only when you figure out the nature, overall entity and its environment, then only you will be able to understand where you are landing it as far as detection risk is concerned. So it is only after audit, sir. So influenced by nature of item complexity, obviously, sir. Okay, as I said, if any process comes in and nobody has got awareness about it, automatically there is a chance of misstatement. So if a particular item is there, the accountability of that item, how to record that item, nobody is aware. So automatically the risk of recording it incorrectly, the chances are very high. That is a risk, that is a potential risk. So it exists before the audit started, right? And control risk, strength of internal control system. So if internal controls are strong, if the entity and its internal controls are very strong, automatically the control risk reduces to a very good level. If the IC control framework is not good, if the management is not having good IC controls, automatically your control risk rises. Why? Because you are not really sure about your controls. You don't have command over your control system. That is why anybody can trespass those controls. Anybody can override those controls. Management, employees can override the controls. You have no control over such things. So automatically it is influenced by how strong the internal control system is there, sir. And for detection risk, audit procedures used, whether a good number of audit procedures are used, whether better testing types are used, how the methodology is there. These kind of things influence the detection risks, sir. And how to reduce inherent risk. The word itself is there. It cannot be reduced. It cannot be reduced, right? Control risk cannot reduce because there is always a chance of override of controls. But still, we can reduce to an acceptably good level. But can we reduce it overall? No, sir. We can try to reduce by implementing better controls, by implementing maker-checker system. We can do such. But there is always a chance of override of any control that are put in place, right? And detection risk. So how can we reduce detection risk? Because it is purely under auditor's control. We can have that reduction by how? By reducing our headache, by taking larger samples, by having better procedures, by having experienced team. With these three, we can at least try to reduce our detection risk to a good level, sir. So this is a comparison table. You can pause the video, take screenshot, right? Take screenshot of this table, or otherwise take a pen, write it quickly, have a note in your day before, like 1.5 day before your exam. You should be able to understand, right? These three are my important parameters, and if any case study comes about these three, I should be able to differentiate between these three. So I should not have any trouble. Write it down or take a screenshot. Revise it whenever you're free. Don't delay it, sir. If you are not revising it, even if you feel like you understood now, you will forget it later. Trust me. So please revise it, sir. Okay? Okay? Very good. Sir, what, sir? Get ready. Sit straight. Listen to this properly. We are going to cover an important essay. Essay 315. Sir, what does Essay 315 mean? Essay 315 means identifying and assessing risk of material misstatement through understanding entity and its environment. So far what we understood, sir? We understood auditor's risk of material misstatement, detection risk. Other scenarios also we understand, right? Now, we understood for a fact risk of material misstatement, auditor should evaluate by exercising what? By exercising his professional judgment. Now, to exercise something, he should have some genesis, he should have some basis, some rationale. How will he get that rationale? He will get that rationale by understanding the entity and its environment, sir. So, what does his essay says? Essay 315 says, identifying and assessing the risk of material misstatement through understanding the entity and its environment. What is the objective of the essay? As I told, for every essay there is an objective. If there is no objective, what will auditor do by reading or understanding that essay? So objective of this essay 315 is identify and assess risk of material misstatement either through fraud or error at financial statement level and assertion level through understanding the entity and its environment. What it does, it provides a basis for designing further audit procedures. When he understands the entity and its environment, and he will be able to navigate the risk of material misstatement. We understood risk of material exists at two levels, at financial statement level and at assertion level. At these both levels, when he understands the entity and its environment, when he is able to navigate that risk of material misstatement, what he can do, he can form a basis, he can get that basis, right, for designing what further audit procedures. What this further audit procedures will do, it will reduce his audit risk to an acceptably low level. Like Abhishek Sharma, we are able to get it, sir. This might seem easy for you. This might seem, sir is shouting, we are also shouting along with sir, I am able to understand everything. No sir, no. Please. Essay 315 is an important essay, sir. Please don't neglect this essay. I don't know. ICAI might ask a direct question also. So, please. What is essay 315? Identifying and assessing the risk of material misstatement through understanding the entity and its environment. Identifying and assessing the risk of material misstatement through understanding the entity and its environment. Pause the video, repeat after me. Essay 315, identifying and assessing the risk of material misstatement through understanding the entity and its environment. Core essay, sir, as I have written here. It is a very core essay, important essay. So, what shall auditor do? There are four steps under essay 315. What is the first step, sir? Identify risks throughout the process of understanding the entity, its environment and relevant controls. How do you understand the entity and its environment? You have to constantly understand by discussing with the management. You have so much of SOPs, the procedures, the control systems, the internal controls. You will be understanding all of them. That is when you will have an understanding of the entity and its overall environment. Environment here means internal environment and external environment, sir. Okay, right? So considering the classes of transactions, balances and disclosures, what sort of transactions exist, what sort of balances, what kind of transactions, what kind of elements are there in the financial statements, you will have to understand and assess. So basis that, you would have the first level of understanding, right? So that is when you have to identify risks throughout the process. So whenever you are having a walkthrough, management will give you a walkthrough as to each and every process that is documented, right? They will walk you through the controls, they will walk you through the process, they will walk you through how this is designed, how the maker checker program is implemented, how the particular transaction is evaluated. They will walk you through each and everything at a sample level. That is when you should navigate your auditor's mind to understand and identify different risks that can involve by understanding the entity and its environment. Okay, understood, sir. So next, assess identified risks, evaluate whether they relate pervasively to financial statements as a whole, right? When you assess the identified risks, what you are doing when you are understanding the entity and its environment, you have identified the risks. Now what you have to do, step 2, assess the identified risks, sir. The first level is you identify risks. Okay, sir. All good only. You are able to understand, no? First of all, you identify risk. First, I got my risk. Next, what? Next, assess the risk. Assess the risk whether they pervasively affect the financial statements as a whole. Right? It is not just affecting one assertion, it is affecting many assertions. Assess. First, identify. Second, assess. Third, relate identified risks to what can go wrong at assertion level, taking into account relevant controls auditor intends to test. Sir, what is an assertion? Assertion means claims that management puts in for a particular balance, right? So for example, as I told in earlier classes also, in earlier revision videos also, if you might have listened completely, right? For example, management says inventory value is 10 lakhs. What are they claiming? They are claiming the valuation, they are claiming the presence, physical, there is a physical inventory, there is a stock, they are claiming for that They are claiming what? They are claiming the completeness. Okay, they are saying 10 lakhs only, not more, not less. So they are claiming multiple assertions. What you have to do, you have to relate the identified risks to what can go wrong at an assertion level. What can go wrong at an assertion level? Very important, sir. To taking into account what you have to take into account the relevant controls auditors intend to test. Auditor must apply the different tests. He has to apply audit procedures to relate the identified risks to what can go wrong at an assertion level. Each assertion level he has to identify. Correct. Next, consider the likelihood. Okay, these are the risks. Now you have identified the risk. Now evaluate and identify and get to a conclusion as to what is the probability. Consider the likelihood of misstatement, probability or possibility of multiple misstatements, and whether potential misstatements is a material magnitude. Right? As I told, misstatement is nothing but a difference of what should be reported and what is recorded. Right? So if you as an auditor, after assessing and identifying all the risks and stuff like that, your job is also to potentially evaluate whether the probability or possibility of this misstatement is going to happen and whether that affected misstatement is material of nature or not. So if it is material misstatement, automatically your audit report, your opinion goes entirely different. If it is normal misstatement, your evaluation says the probability is not of a material nature, then your opinion would be different. You would have given unmodified opinion. Very important, sir. Understand this carefully. If you want, just pause the video, go back and learn again, sir. Please don't skip this. Essay 315 is going to be an important essay, and that would frame lot of idea, lot of thought process for you to be as a good auditor, for you to understand the audit as an overall process, right? Because the step itself is saying identifying and assessing the risk of material misstatement through understanding the entity and its environment. It is a whole lot of a process. This is the entire process if I have to sum it up in one sentence. Correct? Okay. Risk assessment procedures. Types. What are the types? What is risk assessment? You know what are audit procedures. Now we are talking about risk assessment procedures. Right? Audit procedures performed to obtain an understanding of entity and its environment, including its internal control, to identify and assess risk of material misstatement, whether due to fraud or error. Whether due to fraud or error at the financial statement level or at assertion level. At financial statement level and assertion level. Right? So what is risk assessment procedure? It is also an audit procedure, but a risk prefix is attached. Why attached? It becomes more elevated. That audit procedure is more elevated. It is risk assessment procedure. You as an auditor are applying audit procedures to perform and to obtain an understanding of the entity and its environment, which is nothing but Essay 315, sir. Essay 315 talks about the understanding of entity and its environment, including what? Including its internal control. Very much important. Including its internal control to identify and assess risks of material misstatement, whether due to fraud or error at the FS level and assertion level. Okay. These alone, meaning the risk assessment procedures alone, do not provide the sufficiency and appropriateness of audit evidence, because you need to apply further audit procedures depending on the facts obtained, depending on the conclusions you have reached. You have to exercise your professional judgment as to whether you have to apply more audit procedures, or are you satisfied with the sufficiency and appropriateness, the quality and the quantity of audit evidence. That we will learn more when we come to Essay 500. But for now, understand, audit procedures, risk assessment procedures alone will not be sufficient for you to get the sufficiency and appropriateness of audit evidence to base your audit opinion in the final audit report. To have that confidence, these procedures itself are not alone. You have to apply the further audit procedures. Okay, sir. So what are the types, sir? Okay, by which procedures you can classify it as risk assessment procedures? One, sir, inquiries of management and others. 2. Analytical procedures. 3. Observation and inspection. So what are those 3 which we are talking? Inspection and observation, analytical procedures, inquiries of management, others. What is the memory trick, sir? IAO. Inquiries of management and others. A stands for analytical procedures. O stands for observation and inspection. Okay, what are these 3? These are the 3 types of risk assessment procedures, also called as RAP. RAP. So what is RAP? Risk assessment procedure. In risk assessment procedure, how many types are there? 3 types are there. What are those 3 types, sir? IAO. Inquiries of management and others. A stands for analytical procedures. O stands for observation and inspection. So coming to the inquiries of management and others. What does inquiries of management and others says? Sir, you as an auditor, what is your responsibility as per SA 200? Your responsibility, your objective as an auditor to obtain reasonable assurance, to obtain sufficient appropriate audit evidence and to give a reasonable assurance, right? And who is responsible? Who is responsible for the financial statements, sir? Management is responsible. You as an auditor has got no involvement for financial statement that we read in SA 200. Correct? Sir, coming to the inquiries of management and others. Sir, what does it constitute? Internal audit personnel. So with them, what do you inquire? The internal control design and effectiveness. Employees handling complex and unusual transactions. What do you ask? Accounting policies, right? In-house legal counsel, litigation, fraud and compliance, marketing and sales personnel, sales trends, marketing strategy, risk management function, operational and regulatory risks, IT and information system personnel, system changes, control failures. So for each and every department in an entity, right, with the client, they have a particular function. You as an auditor are responsible to understand their function in full-fledged manner. So inquiries of management and others means that you as an auditor have to understand the management, have to understand and ask the employees, have to understand the different functions, different areas within the client, within the company, to have an overall understanding, right? Then you can pose the right questions, then you can have the questions whether to inquire, properly inquire, get your answer. That answer should be sufficient and appropriate. That should be forming part as an audit evidence, or it should be forming part for you to leverage more audit procedures because you are having newer insights. Because of the inquiries, you are able to understand newer information. With this newer information, you are able to generate more audit procedures. You have to decide and exercise professional judgment, sir. Okay, that is very important. First one, inquiries of management and others. Second, analytical procedures. What does analytical procedures means? Analytical procedure, again, it is a very important essay. We'll cover it in the essay 500 series. What does it say? What does this analytical procedure mean? So it is nothing but you are studying the plausible relationships between the financial and non-financial data to have comparison, trend analysis. You are doing multiple variance analysis, key ratio analysis to get an understanding at a level to give you comfort as far as numerics is concerned, ratios are concerned, trends are concerned. That is analytical procedures. So identify aspects of entity auditor was unaware of, identify unusual transactions, amounts, ratios, trends, include both financial and non-financial information. Example, so relationship between sales and selling space or volume. Let's say, for example, this year industry for a particular, let's say sales for a particular industry, let's say automobiles is very good, but you see till last year sales were good, sales numbers were good. This year suddenly sales got dropped, but industry is, as an industry, it performed very well. There's no change in the industry, but you see sales number dropped. Why? There could be some reason. Those trend analysis you have to perform so that you will have proper understanding. Not just financial, non-financial space also you need to really see, sir, because that gives you extra edge. So it helps you to identify certain levels of fraud and helps you to also identify the risk of material misstatement through analytical procedures. At a high level, it gives you a broad initial indication. Okay, there is this shift of 10%. Okay, attrition rate of employees 10% number is less. Last time it was 800, now it is 720. Right, 10% employees decrease suddenly. Why? What is happening there? But salaries of the employees are increasing. What is this difference of trend? Why is this moving in indirect correlation? What is it like? You have to understand whether there is any fraud, is there any mismanagement of employees that is happening, what is wrong, why the salaries are more but employees are going away. You should understand these key trends. You will have a high level of indication. With that indication, you can take your step forward. Right, as an auditor, you will be developing more audit procedures with the initial step, that is analytical procedures. And 3, what is it, sir? Observation and inspection. Those two are critical. Observation and inspection we do when we go to the audit place, when we go to the physical inventory store, or when we vouch fixed assets. What we will do, sir? We will inspect, we will observe. Those are all audit procedures only. By observation, by counting, or by inspecting, we will be validating and we will be having that sufficient and appropriate audit evidence. We will be observing the entity's operations, documents, what kind of documents, the business plans, and we will be observing and inspecting the standards of operating procedures, SOPs, right, strategies, records, internal control manuals. These all we can inspect. Whether these inspected documents are performing in real time. So what we will do, we will go and observe also. Right, as an auditor, your duty is not just to rely, but also to perform your own audit procedures to reduce your audit risk to an acceptably low level. Understood, sir? Okay. Right. So these 3 risk assessment procedures. What are those 3? IAO. But what is risk assessment procedures? These are also audit procedures, but they are performed to obtain an understanding of entity and its environment, which is nothing but what we are talking in SA 315, including its internal control, to identify and assess the risk of material misstatement, whether due to fraud or error at a financial statement level or at an assertion level. Understood, sir? And for this risk of material misstatement, for what we are doing as risk assessment procedure, which is RAP, we have 3 types. What are those 3 types? IAO, inquiries of management and others, analytical procedures, observation and inspection. Very good, sir. So far you are able to understand. Sir, this again I am reiterating, this chapter is important. This chapter is important. If you are not able to understand, pause the video, read, glance, take screenshot of the notes, take it. Understand, sir. Understand. Then only you will be able to write anything in your exam. Otherwise, you can't, sir. If you try to by heart, you will only waste more time, sir. If you try to memorize, try to memorize. If you try to understand and memorize, then it will be easy for you, sir. Audit is not a tough subject, sir. People who try to memorize without understanding the concept only feels it tough, because you have to put it on paper, all that you have understood. No direct question comes in audit, sir. You have to evaluate. You have to put the concept in action, my friend. And this is not just for exam also. This is for your life. You as a chartered accountant, when you become as an auditor, you should understand your responsibility as an auditor. You should understand how to identify risk of material misstatement, what standard applies. Suddenly, you should be able to recollect. Array, Sri Harsha sir told SA 315 is very important to identify the risk of material misstatement. How can we identify risk of material misstatement? Through understanding the entity and its environment, sir. Not just understanding entity and its environment, but we also do what, sir? Entities internal control also will evaluate, sir. That is nothing but risk assessment procedure, sir. Okay, sir. Okay. Very good. Very good. Keep it up. You will be doing well. Let's cover the other part in part 2. Okay. See you. Bye bye.